Robinhood's latest offering is nothing more than synthetic bullshit at its finest. We're going to be talking here about a contrived financial construct that prioritizes hype over actual substance. And it's going to leave a lot of retail investors exposed to catastrophic risks. I'm going to give everybody just a minute to get in here. What's going on, ladies and gentlemen? I see you. Thanks for joining. I'm going to give everybody just a minute to hop in since I literally just launched this live stream out of nowhere. Well, this is a major warning, and I think most people don't understand just how big of a problem this is going to be. Hey, Corey, Steven, ladies and gentlemen, welcome. It's hanging out today, poolside, and I could not stop thinking about just how out of touch Vlad Tenev is, because I see that Charles Payne is having him on Fox Business today, and every single person in the comments is talking about how they were robbed by Robinhood when they pulled the buy button on their crypto or on their stocks, or didn't allow them to transfer out their crypto without having to sell it first, thus incurring capital gains tax, or thus realizing previously unrealized losses. But this is probably going to be bigger than all of those combined. What's going on, folks? Just going to give people just another minute to hop in here. What's going on? International greetings from Costa Rica. Greetings from sunny Texas. We're right there with you, my friend. What's going on, Nicholas? Welcome back. John and everybody. The problem with Robinhood's latest offering here is it is literally a synthetic derivative. It is probably one of the most insidious developments in modern fintech. And Robinhood is offering tokenized securities for OpenAI and SpaceX. And in case you were unaware, both of them are private companies. We're talking synthetic offerings backed by nothing. And Vlad Tenev is on Charles Payne's Fox Business and plenty of other shows right now talking about how this is going to be good for retail investors. At the end of the day, if you're a retail investor and you're looking for exposure to high growth private markets, this is a huge warning to you, okay? The product that Robinhood is currently offering is fraught with nothing but peril, and it's masquerading as innovation. The reality is that it's functioning as little more than a synthetic derivative. It's almost exactly the same as a speculative bet, a wager on FanDuel. If you're buying these derivatives, you might as well be betting on sports in FanDuel. But at the matter of fact, that's probably a better bet, because at least then you've got a 50-50 shot in many cases. So let's talk real quickly about the mechanics and check out these risks, because once we expose these risks, I think a lot of people, when they actually start to understand what this means, they'll be more well armed with the insights in order to safeguard your portfolio and save your money from this synthetic bullshit. All right. So recall that last month, at Robinhood and CEO Vlad Tenev, completely out of touch, decided to hold a summit in Cannes called To Catch a Token. And the venue was more suited to cinematic illusions than actual financial transparency, folks. It is a complete joke that this guy thinks that having a venue on the sunny beaches in Cannes is something that would resonate with retail investors. When in reality, he just wanted to take a vacation and write it off as a business trip by claiming that they're going to do this summit there. This guy is completely out of touch with retail investors and what they actually want and need. If he gave a shit, they wouldn't have pulled the buy button on AMC and GameStop. They wouldn't have made you sell your crypto even before they would have allowed you to transfer it out. Time and time again, Robinhood has proven themselves who they are. Nicholas, sadly, it's legal, and I'm going to explain exactly why. Okay, the platform here, Robinhood, basically unveiled tokenized access to shares in these elite private entities, OpenAI and SpaceX, touting them as a gateway for everyday investors to participate in artificial intelligence and space sectors. They gave these promotional incentives, included with these like nominal stakes, such as like a €5 bet in OpenAI tokens for the eligible EU users, propelled Robinhood stock upwards by nearly 13%. But behind this veneer of, quote, accessibility, there's this construct that is designed to entice people, not empower them, right? It wants to lure you in. So at the core of these tokens, they're not genuine securities. They're not securities at all. Robinhood has not tokenized authentic equity from OpenAI or SpaceX. Instead, they're offering synthetic derivatives. These are financial instruments that ostensibly mirror the underlying value, or at least they're supposed to, but without actually conferring any substantive ownership in any way whatsoever. And they're backed by Robinhood's holdings in SPVs. That means special purpose vehicles. So these tokens provide mere indirect exposure via a blockchain infrastructure on Arbitrum that enables around-the-clock trading. And even still, they're only making it 24 hours a day, 5 days a week. But this abstraction strips away all of your essential rights. There's no voting privileges. There's no dividend rights. There's not even a direct claim in the event of corporation success or in the event of corporate dilution or dissolution, meaning that if the company goes bankrupt, if the company makes money, there's not even a direct claim that you can get anything from it. So it's analogous to holding a bet on an asset's performance that is completely detached from the real economic drivers here. Well, Ron says, bro, the stocks and the stock market is general a scam. I hear where you're coming from because a lot of them are greatly manipulated. And that's the whole purposes of lit exchange, by the way, to be able to prevent wholesalers and dark pools from manipulating and front running your trades by routing your orders to lit markets. But I digress. Stocks are at least an asset that is backed by a company that, if it's a good company, makes many, many dollars in revenue and many, many dollars in profits. Those are real economic drivers. Whereas these securities, you might as well be making a bet on the fucking Cowboys versus the Bears. It doesn't make a difference. This is Robinhood. Right? And see, you know what's even more important is the fact that both OpenAI and SpaceX have come out to say that they do not endorse this. As soon as this rolled out, OpenAI issued this huge disclaimer and these posts on social media, on Twitter, on X, on other social medias, and they said that there is no affiliation. No affiliation exists. We did not partner with Robinhood. These tokens do not represent any legitimate equity whatsoever. And they cautioned people against these misconceptions that could mislead investors. Because Robinhood has already misled investors many times. As a matter of fact, you think that you're not paying to trade, but the reality is Robinhood investors lost $34 million more with these commission-free trades than if you would have just paid $5 up front. Yes, the Securities Exchange Commission fined Robinhood $65 million for lying to retail investors about their payment for order flow, about the dark pool usage, about the wholesalers. And through commission-free trading, your buys and sells are so poor that you literally spent, everybody combined on Robinhood, $34 million more because they thought their trades were free. There's no such thing as a free lunch. If it's free, you are the product. And the fact is that $34 million is a ton of money. That even accounts for the money you would have spent if you had paid $5 a trade for a very large trade. That's huge. That's huge. Imagine how much it was when you take into account all the small trades that people do that these brokerages are now doing for pennies. What's going on, Bacon? Great to see you. Hello, Game Hub, Henry, ladies and gentlemen. Yeah, I found it insane that Charles Payne actually had Vlad on Fox Business today, and he didn't ask him any hard questions. It was a layup. It's almost as if Robinhood paid Fox Business to be on their channel, on their show, and give them these beautiful little layup questions to tout their product. But let's say that the fact is that even SpaceX and Elon Musk came out to directly say that these are, quote, fake stock tokens. They literally said that. Fake stock tokens. Elon Musk said that. He tweeted it. He's talking about it all over the place. The issuers themselves, OpenAI and SpaceX, have absolutely zero affiliation with Robinhood and are completely disavowing this product, guys. So this signals that there's some really profound structural flaws here, and sophisticated investors, retail investors, can't just overlook this and pretend it's not a big deal. So if you actually carve into this, they're not just inconveniences, guys. Far from it. These are existential threats to your money, existential threats to your capital. And it all stems from deceptive marketing. Once again, from Robinhood. Deceptive marketing, time and time again, is the way that Robinhood has grown their business. Those aren't my words. Those are the Securities and Exchange Commission's words. Robinhood positions this as, quote, tokenized securities, and they're implying that this is the democratization of private markets for retail. But the reality is that this is about the same as contracts for difference. And if you don't know what that is, there's CFDs, exotic options, purely speculative vehicles where the platform is acting as a counterparty. And the valuation of these vehicles, of these securities, not these synthetic securities, the scam, completely hinges on Robinhood's SPVs, their management, and any misalignment and the suboptimal handling or the external market shocks could easily erode the value of these tokens from the underlying company's performance. That means that if the companies go to the roof, there's no guarantees that your securitized scam tokens are going to go to the roof. There's huge liquidity risks here, and these assets may easily prove to be completely intractable in volatile conditions, completely worthless, with potential spreads and huge blockchain fees that could erode your returns massively, if not entirely. So we're looking at a massive regulatory jeopardy as well, and that's why you can't buy these in the United States. This would only be like overseas, right? This can only something you could buy in Europe, because the United States SEC, as crooked as these markets may be, do not allow these scam tokenized securities. Facts. It's so bad that even the Bank of Lithuania has already initiated an investigation into these, and an adverse ruling could easily precipitate the devaluation of these. So you could buy these securities, these scam securities in Robinhood for OpenAI and SpaceX, that are not really backed by either of these companies, and simply by them being labeled a scam in Lithuania, for example, there could be devaluation, there could be trading halts, or just straight up outright prohibition, at which point we're echoing the precedents that have been set by the collapse of FTX, where the hype precedes the catastrophe. So right now, this is something that's going on in Europe, and this offering is sidestepping the United States oversight by the Securities and Exchange Commission by not offering them here. But the global ripple effects could easily easily entrap and ensnare and destroy portfolios of retail investors all around the world, internationally. So the danger here resides in that this is gambling, folks. This isn't even investing in a company. This isn't even investing in stocks, because it's not that. It's not even backed by the stocks. There's no shares of stocks for OpenAI and SpaceX. These are synthetic derivatives. Literally, the mortgage-backed securities crisis, contracts for difference of 2008, but worse, because we're talking about space exploration and artificial intelligence. There are very abstract concepts. We're talking huge. This is FanDuel on steroids. All right, sports betting platforms facilitate the wagers on these with unpredictable outcomes, and we're looking at the very same thing. The tokens here are doing nothing but inviting speculation on the quote perceived value, without actually any rigor of traditional exchanges, without any oversight. And absent only the linkages to the financial statements or the safeguards of being an insider, they literally embody the derivative excesses that precipitated the 2008 GFC, the global financial crisis. So it was mortgage-backed securities, and now that was supposedly backed by housing. We saw how that went. And now this is basically the same thing, except it's not even backed by real estate. It's cloaked in the allure of blockchain. There's nothing there. There's nothing there. Not the blockchain, with the companies, period. Because they're not endorsed. They're not held actual equity. It's just the SPVs, the special purpose vehicles. So a single valuation discrepancy, like a change or a disagreement or intervention by regulators, could absolutely decimate everybody that invests in these Robinhood tokens. Everybody. And Vlad Tenev is out there trying to claim that it's democratizing finance for retail investors. This is not the way. Payment for order flow is not the way. Dark pool trading is not the way. Commission-free trading is not the way, because you're still paying. In fact, you're paying more, $34 million more, than if you had just paid a few pennies or a few bucks for your trade up front, because the buy and sell prices are so bad, the hidden fees are so much, that you're literally losing way more than if you had just spent a few cents or a few dollars on a trade. And now entire portfolios are at risk. People's families, entire generations of wealth are at risk. These tokenized securities by Robinhood are not a breakthrough. They're a sophisticated enticement. All right, this is prioritizing the revenue of platform over retail investors, over your welfare, over your financial well-being. People that really want true exposure to OpenAI or SpaceX can pursue accredited pathways. There are venture funds out there. There are secondary markets. There are direct networks, even, that demand the diligence over this, quote, convenience. It's a fucking sham. It's a fucking sham, completely. Retail can win, Hebid, but not if they're left holding worthless securities of companies, worthless scam tokens that aren't even backed by securities. This is synthetic bullshit at its finest. Like I said, this is a contrived financial construct that prioritizes hype over substance. And it's going to leave a lot of retail investors exposed to these catastrophic risks, without question. They're not tokenized equities in any meaningful sense. They're engineered derivatives, fabricated proxies that Robinhood claims track the value of OpenAI and SpaceX by the shares that are held in their opaque SPVs, these special purpose vehicles. And it's synthetic because there's no direct linkage. There's no blockchain immutably that is representing actual ownership. Okay? Instead, you're being handed a digital IOU. It is a bet on Robinhood's internal valuation mechanisms that is completely detached from the company's true economic realities. If the company makes money, there's no guarantee you're going to make money. If the company loses money, there's likely a guarantee you're going to lose money. That's the problem here. And so there's been recent reports that underscore the fact that this detachment basically manifests themselves to a high risk for tracking errors, where the token prices will diverge very wildly from the actual underlying assets value and the performance due to the mismanagement in the special purpose vehicles or the inefficiencies in the markets. So this is basically, imagine, okay, your portfolio just hemorrhaging value. And it's not because OpenAI does badly or because SpaceX does badly, but because Robinhood's synthetic wrapper has a glitch. How many fucking glitches have we seen on Robinhood over the years? How many times have they had to pull the buy button or pull the sell button or pull the transfer button on stocks and equities and crypto? Not just one or two, but many, 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 many times. I can name literally right now millions and millions of people could step forward and state how they've been screwed over by Robinhood and lost a lot of money to them. Billions and billions of dollars. This is pure bullshit, folks. And all it does is it's gonna amplify volatility, and it's gonna erode retail investors' trust in financial markets even more. A lot of people are jaded enough by it. Yeah, I said quiet in here says FTX all over again. This is echoes of FTX, my friend. This is echoes of FTX. And one day in the future, people are gonna look back on this video and be like, holy shit, look at this fucking asshole was right. And other people on YouTube and Twitter that are talking about this right now, X, they were right. How come we didn't see this coming? I lost my entire family's savings. I lost so much money. I thought OpenAI was a good company. OpenAI continued to do well. SpaceX continued to do well. Their valuation is growing. How did I lose all this money if the valuation of this company is growing? It's the lack of regulatory oversight. When the Bank of Lithuania started scrutinizing this and is now talking about it with Robinhood for their compliance, Robinhood's stock, of course, fell immediately, right? Still near all-time highs, but not at them anymore, that's for sure. Because your investment here hinges entirely on Robinhood's solvency and Robinhood's integrity. And I think we found over the last few years that Robinhood has no fucking integrity. Again, folks, this isn't crypto. This isn't stocks. This is cat shit wrapped in dog shit. All right. This is the gambling mechanics that are baked in by Robinhood. The synthetic bullshit transforming sophisticated allocation into a FanDuel bet, a FanDuel wager, where the outcomes basically rely on the quote perceived value rather than the actual fundamentals and the growth of these companies. It's completely absence of the financial ties. There's going to be no insider reports, no dividend flows, no voting rights, no voting influence, and you're just simply people are speculating on hype cycles. And OpenAI has already outright rejected it. Elon Musk and SpaceX have outright rejected it and are warning people of the misrepresentation here by Robinhood. It's going to fuel volatility, and these tokens are completely prone to manipulation and the sentiment-driven dumps. Completely. It's going to be insane. There's huge liquidity traps. So anytime there's a downturn, these assets, these quote assets, right, that are based off Arbitrum could easily freeze. There could be huge hidden fees from blockchain transactions and massive platform spreads, bid-ask spreads, that siphon away any returns you may have had in the first place. This is not diversification. It's a highly leveraged trap that could easily cascade losses, folks. Cascade losses across all of these correlated holdings, especially if there's a market correction or a problem with Robinhood or a problem with their SPVs. All right, that's the biggest problem here. Tokenized stocks here have already stumbled out of the gate with rocky launches and persistent fallout, and we saw it with FTX. When FTX went bankrupt, we saw their books, and they claimed to hold millions of shares of AMC, millions of shares of GameStop, and the reality is they didn't hold a fucking thing. So all we're seeing now is the risk of backlash that's going to stifle actual blockchain. It's going to hurt crypto. It's going to hurt blockchain. One second, baby girl, real quick. The fact is that this hype is going to inflate bubbles, but reality is going to pop those bubbles. Cheers, my friends. Have a great fucking day. Hey.